Good morning. Today, I will share my monthly trading results. The signal arrived on February 23rd, on daily time frame, at the close of the candle. The price made a large bullish movement, easily breaking out of the daily white EMA and making a new period high. Generally, I prefer to not operate on movements that are in a fairly advanced stage, so I decided to follow this signal on the lower time frames. The true signal arrived a few days later, on the 1-hour time frame. In fact, after the signal on the daily chart, the price has undergone a decent retracement, bouncing off the white EMA and then rising again, making a new high. I expected a rebound signal, which occurred on the first day of March. I opened a bullish trade, placing the stop loss a few pips below the daily pivot, which corresponds to the low of the day. The price quickly went into profit, allowing me to close half of the trade after a few hours, when I reached the risk-reward ratio of 1-to-1. Unlike classic trading done on a daily or 4-hour time frame, I decided to not move the stop loss to a break-even position, as the range of movement is very small on the 1-hour time frame. Shortly after, the price reached the target, positioned at the daily black EMA, closing the trade with a good profit. I am very satisfied with this operation, which lasted very little, less than 3.5 hours, but giving a good result. The signal arrived on the 8th of March, on the 4-hour time frame. The price started the week by attempting a weak rally, which ended with a rebound on the weekly pivot. The weekly review led me to consider directionality uncertain, allowing to look for signals in both directions. I opened a bearish trade, placing the stop loss a few pips above the weekly pivot. The price attempted a weak decline, stopping at the previous low for the period. Unfortunately, the operation ended with a stop loss, caused by a rapid retracement. The signal arrived on the 3rd of March, on the 4-hour time frame. The price has undergone a significant retracement that caused a rebound on black EMA. After the rebound, the price resumed its descent, returning below the weekly pivot. I opened a bearish trade, placing the stop loss on the weekly pivot level. The price underwent a rapid retracement, closing the trade in a few hours. After a very positive start, thanks to the operation made on the first day of the month, I suffered 2 consecutive stop losses. Obviously, this is a part of the trading job, and is the main reason why it is important to have a solid operational strategy, which must be followed when trades are good, but especially when they are wrong. It's also very important to have proper money management, so that you can suffer a couple of stop losses without compromising your economic and psychological capital. During the previous week, the price made a good rise, retracting from the bearish directionality. On the last day of the week, the price returned to fall, and then rebounded on the slower moving averages. I have been waiting for a new bearish signal to enter the market. I placed the stop loss a few pips above the high of the candle that generated the signal. After a short hesitation, the price made a modest bearish move, hitting the first target and closing half the trade to guarantee me a profit. I moved the stop loss to break-even, to protect myself from any retracements. The price underwent a significant retracement, closing the second part of the operation at break-even. I wasn't very surprised by this. The fact that had previously come very close to the white EMA without touching it, let me imagine that it could have done so later. The signal came on March 23rd, at the close of the 4-hour candle. The last day of the previous week, the price underwent an interesting fall, without however making a new low. For this reason, I decided to follow the movement on the 4-hour chart. I waited for the price to return to the downside to open a trade, placing the stop loss on the high level of the week. The operation quickly went into profit, allowing me to close half of the trade to secure a profit. Looking at the daily chart, I decided to let the second part of the operation to continue, without immediately breaking even the stop loss as I usually do when the operation has higher risks, or more limited margins of movement. Since similar patterns are frequent and generally lead to short retracements, I decided to close the second part of the trade. The signal came on March 29, at the close of the 4-hour candle. The price made a fairly common pattern earlier in the week, moving higher and bouncing off the slower moving averages, before fully retracing. I opened a bearish trade, placing the stop loss a few pips above the high of the day. The following day, the price hit the first target, closing half of the trade, to guarantee me a profit. I moved the stop loss to break even, to protect the second part from any retracements. Unfortunately, the bearish movement did not have the strength to create a new low, so the price retraced, hitting the stop profit, thus closing the second part of the operation. If you want to see other operations, visit the weekly operations section of our blog. Thank you, and see you next month.